Students, welcome back. This is Mrs. Mercado speaking. This is the course Accounting 2401, Principles of Financial Accounting, and this lecture pertains to Chapter 5, which deals with accounting for retail businesses. Okay, the textbook that we are using is Financial and Managerial Accounting, 15th edition. Please make sure that we read the chapter. There's a lot of information included in this particular chapter. Please make sure that you review it in detail, that you read the chapter in full before you begin working on your assignments, okay? So I'm going to jump right in because this is going to be kind of a long presentation because the problems are a little bit long. I am going to cover 3 out of your problems from your homework. The rest you can figure out on your own, and if you have any issues or questions, you can always reach out to me, okay? So the first exercise that I'm going to cover with you is exercise 515. This particular problem deals with determining the amounts to be paid on invoices, okay? So, it says, determine the amount to be paid in full settlement of each of the following invoices, assuming that credit for returns and allowances was received prior to payment and that all invoices were paid within the discount period, okay? So, they're giving you very specific information. Excuse me. So, it says, we have to assume that all invoices were paid within the discount period, okay? So if you read the chapter, you've already identified what the discount period is. There's some discounts issued out. The terms are provided to you in the problem, and they give you, 5 different scenarios that we have to basically analyze and calculate our payment amount, okay? So I've set up the problem like this, okay? I started off with the invoice amount. We are going to subtract our customer returns and allowances if we have any. I'm going to subtract any discounts, and I'm going to add any freight. And that's going to give me my payment amount, okay? So, let's start with the first one, okay? So, the first one says that my invoice amount is $32,000. I'm going to plug that in right there, okay? Okay. And let me just copy and paste this down because we're basically going to do these calculations, but that way we don't get confused. Here we go, what we're doing. There we are. Okay, so I'm going to subtract my customer returns and allowances. Do we have any returns? Yes, we did. We had $1,600 worth of returns. Okay. Now, did they offer me a discount if I paid within a discount period? The answer for this one is no. It says N30. So what does it say? It basically says that you have to pay the invoice amount within 30 days. No discount given. Okay. So do we have a discount? No, we do not have a discount. Are we paying any freight? It's FOB destination. If we look on Exhibit 8, FOB destination means that the seller pays for the freight. Okay, so we don't have to worry about the freight in this case. So my freight is 0. Okay, so now I'm going to do my calculation, which is going to be equals to the invoice amount minus your customer returns and allowances minus your discounts plus your freight, okay? So remember, it's the invoice amount minus your customer returns and allowances minus your discounts plus your freight, okay? So that will give me $30,400, okay? Let me see, I misplaced. I found my information. Okay, so I'm only going to do that formula once, and I'm just going to copy it down. I like using Excel because once you put a formula in, you can just basically drag it down, and it'll automatically populate. The key is putting that first formula correct, and the formula is just basically getting the information and doing whatever it tells me here on my formula bar, okay? So, my payment amount is going to be $30,400 for letter A. For letter B, okay, my invoice amount is $12,800, okay. We had $2,500 in returns and allowances, okay. Now, do we have any discounts? In this particular case, they're saying that we have FOB shipping point 210 and 30. So what does that mean? That means that you'll get a 2% discount if you pay within 10 days, and if not, everything is due within 30 days. Okay, so they're offering you a pretty good deal, a discount, if you pay within 10 days. Okay, and why do they want to do that? They want to collect their money as soon as possible. So they say, you know what, if you pay me within 10 days, I'll give you a 2% discount. So to get the discount, it gets a little bit tricky. For the discount, you have to get the invoice amount minus your customer returns and allowances, and then you multiply the discount percentage, which is 2%. Okay. So it's the invoice amount minus your customer returns and allowances times the 2%. That gives you $206. Okay. So if I were to use a regular calculator, what I would do is I would do 12,800 minus 2,500. That gives me 10,300 times 2%, and that would give me the 206 right there. Okay. And then do we have any freight? We have it's FOB shipping point. When we have FOB shipping point, the buyer pays for the freight. We are the buyers, so we are responsible to pay for the freight. Okay, so we have a freight of $300. Okay, so the amount that I have to pay on this particular transaction is $10,394. Okay, and we have a whole bunch of different components. Okay, letter C. For letter C, we have merchandise on the invoice for $21,000, and I forgot a 0. 1, 2, 3. Okay. Do we have any returns? Yes, we had $4,000 worth of returns. Okay. Did they offer a discount? Yes, they did. In this particular case, they offered you a 1% discount if you paid within 10 days. If not, everything is due within 30 days. So to calculate the discount, it's going to be the invoice amount minus your returns times your discount percentage of 1%. So I'm going to get a discount of $170. Okay. This is FOB shipping point. Remember, FOB shipping point. The buyer pays for the freight, but there is no information provided here, so we can't include that. So we'll just have that as 0 for now. Okay. Sometimes the freight gets billed separately, so you'll get a separate invoice for the freight. Sometimes it's included within the invoice. It just depends. But in this case, we don't have any information for the freight, so we can't include it. Okay. So the amount that I'm going to pay is $16,830. Letter D. My invoice amount is $9,000. Okay. Do we have any returns? Yes, we do. We have $1,000 of returns. Do we have any discounts? Yes, we do. We have a 2% discount if we pay within 10 days. So that means I'm going to have to calculate my $9,000 minus my return of $1,000 times my 2%. Okay. Make sure you put that percentage. That way, if you don't enter it, it'll give you the wrong calculation. So my discount is of $160. We're doing FOB shipping point, so that means we, the buyer, are responsible for the freight, and they're giving us an amount of $175. So we'll include that under freight. And my payment amount is $8,015. Okay, and how is that $8,015 calculated? It's your $9,000 minus your $1,000 customer return and allowance minus the discount we calculated of $160 plus the $175 freight. Okay. The last item we have is letter E. The invoice amount is $77,400. We do not have any returns. Okay. Did they offer a discount? Yes, they did, of 1% if we paid within 10 days. If not, everything is due within 30 days. So my discount is going to be, in this case, I don't have any returns, so it'll just be my $77,400 times my 1%. And that will give me a discount of $774. And it's FOB destination. FOB destination, the seller pays for the freight, so we don't have to worry about it. So my freight is 0. So the amount that I have to pay on my invoice is $76,626. Okay, so I would recommend that you set something up similar to this, whether it be in Excel or in a piece of paper. That way you identify each of the categories. You need to have your invoice amount. You have to figure out your customer returns and allowance if you had any. You have to calculate your discount, and then you have to include your freight if it's your responsibility. Remember, we're buying stuff, so if it's FOB shipping point, we, the buyer, pay for the shipping. Okay, very important. Okay, so that is the first problem that I'm going to go over. It's just a matter of calculating the payment amount for each of those transactions. Make sure that you have read carefully and understand the shipping terms, okay? Now, the second problem I selected to go over is exercise 527. This is a multiple step income statement, and it's a little bit more different doing an income statement for a merchandising company than for a service company, okay? So this is a retail business, so the income statement varies slightly. Same concepts, but just different accounts are introduced. Your chapter introduces you to these new accounts that we're going to be using. So now we're going to be preparing an income statement. So it says, on March the 31st, the balances of the accounts appearing in the ledger of Royal Furnishings Company, a furniture store, are as follows. And then they give you all of the account information and the balances, okay? They're asking you to prepare a multiple step income statement for the fiscal year ended March the 31st, okay? So, when we're preparing an income statement for a retail business, we always start off with our sales, okay? How much did we have in sales, okay? So, the sales amount was provided right here. We had sales of $8,245,000, okay? So we're going to put it in the second row because that's my grand total, $8,245,000, okay? Let me just put some commas here, that way it'll look cleaner, okay? And then right below your sales, you're going to have your cost of goods sold. This is how much you spend to generate or produce your goods, okay? So this represents an expense. This is what you've spent to make the product, okay? In this case, the balances. This is how much you purchased the furniture for, okay? This is a retail business, so you bought furniture from someone else, and then you're selling it in your shop, okay? So what you paid for these goods that you're reselling is, in this case, my cost of goods sold, and I spent $5.5 million on that furniture, okay? So we're buying furniture from another company and we're selling it or reselling it in our shop. This is retail businesses, okay? So basically, on a retail business, we acquire merchandise for resale to customers, okay? So it is the selling of merchandise instead of a service. So instead of providing a service, now we're buying stuff from a third party and then we're reselling it, okay? So that's why it makes the activities for a retail business different than from the activities of a service business, okay? So, cost of goods sold. How much did you buy that furniture for? Well, we spent $5,500,000. And I'm putting in minus because that's money that I spent to purchase this furniture that I'm selling, okay? So, your sales minus your cost of goods sold, that is going to give you your gross profit. Okay, so the $8,245,000 minus the $5,500,000 will give me a gross profit of $2,745,000. Now, basically, what a multiple step income statement is, it basically contains several sections, subsections, and subtotals. Okay, the sales we've already gone over. That's the amount of sales to customers for cash or on account. That is what it's reported on this section. How much did you sell those goods for, and how much did you sell for that particular period? Your cost of goods sold. This is the amount. Amount is the cost of goods sold to customers. So this is basically what you spend on the purchase of those furnishings that you're reselling. Okay. Then your gross profit is the excess of sales over cost of goods sold. So your sales minus your cost of goods sold will give you your gross profit. Okay, so that is the first part. The next thing we have is our expenses. Okay, now we have two types of expenses. We have selling expenses and admin expenses. Okay, selling expenses are incurred directly in the selling of merchandise. Some of the examples include sales salaries, store supplies used, depreciation of store equipment, delivery expense, and advertising. And then we have administrative expenses. These are also called general expenses, and these are incurred in the administration or general operations of the business, okay? And this can include the office salaries, depreciation of office equipment, and office supplies used, okay? So we have our expenses, and then we have, the first one we have is selling expenses. And remember, on the income statement we have revenues and expenses. That's what the report displays. Okay, so we have selling expenses. Let's see if we have, we have selling expenses down here, $575,000. Okay, so I'm going to put them in the first column because I'm going to add my selling and admin expenses together. Okay, and then I'm going to have my administrative expenses. And my administrative expenses are $435,000. Administrative expenses, okay, $435,000. So I'm going to add those together to get my total expenses. Okay. So I'm going to add them together, but because these are expenses, this is money that I spend, it's going to be in a minus sign or in parentheses, okay? So the total of these two is $1,010,000. And remember, it's minus because this is money I spent. I spent money to buy the furniture for $5.5 million, and then I had other expenses of $1,010,000. Okay? Now I can calculate my operating income. Okay. I skipped a line. Let me copy that over here. Okay. So my operating income. I am going to calculate my operating income, and your operating income is going to be your gross profit minus your total expenses. So $2,745,000 minus $1,010,000 will give you $1,735,000. So operating income, sometimes called income from operations, is determined by subtracting operating expenses from gross profit. Okay, operating expenses are usually classified as either selling or admin expenses, which we had already covered. Okay. So the next thing, the last thing we have is another category called other revenue and expenses. Okay. Now, my other revenue and expenses are items not related to the primary operations of the business. Other revenues is revenue from sources other than the primary operating activity. So if your business is selling furniture and you're making money renting offices on the side, that is other revenue that you have. Maybe you have a little off, or you have your office and you're selling a piece of it. You're not selling it, you're renting it. I'm sorry. You're renting it out and you're generated income from that rental. Then that could be other revenue. Or you can have money invested or interest. Anything that results in money being generated that is outside of the regular operations of the business will fall under other revenue and expenses. Okay. Okay. So under there we have, okay, so accounts receivable goes on my balance sheet. Accumulated depreciation goes on my balance sheet. Building goes on my balance sheet. Cash on my balance sheet. Okay. Common stock, my retained earnings, dividends. Okay. Here we have an expense. We have an expense. I'm looking for all of my revenue and expense accounts. Okay, I want to make sure that I include them all. Okay, so interest expense is an expense that we didn't account for up here. Okay, so I have to include that under other. Okay. Okay. So we have interest expense of $15,000, and anytime you have an expense, it goes in minus parentheses. Okay, and then let me see if I have any other expenses or revenues. Notes payable, that's a liability. Office supplies, that's an asset. Salaries payable. Okay, so we don't have any more revenue or expense accounts that need to be included on my income statement. So that's it. Now I can calculate my net income. Okay, so your net income is going to be your operating income minus the $15,000 of interest expense. So my net income is going to be $1,720,000. Okay, that is my net income. Okay, so that is my requirement A. Prepare a multiple step income statement for the fiscal year March the 31st. So we have everything done. You start with your sales minus your cost of goods sold will give you your gross profit. And then you subtract your selling and admin expenses. You get the total. You subtract that from your gross profit to get your operating income. And then from your operating income, if you have any additional revenue or expenses that does not fall into the normal operations of a business, you include them here. In this case, we have $15,000 of interest expense. Then finally, you calculate your net income, which is your operating income, minus any additional expenses or plus any additional or other revenues, and then you'll get your income. Okay. So it says compare the major advantages and disadvantages of the multiple and single step forms of the income statement. So let me put a little text box here so I can answer that question. Okay. Let me type. So the major advantage of the multiple step income statement is that relationships such as gross profit to sales are indicated. Okay. The major disadvantage is that it is more complex and the total revenues and expenses are not indicated, as is the case in the single step income statement. I'm just going to abbreviate single step income statement. There we go. Okay. So the major advantage of the multiple step income statement is the relationships let me see. It's the relationships such as gross profit to sales are indicated. The major disadvantage is that it is more complex and the total revenues and expenses are not indicated, as is the case in the single step income statement. Okay, so it can be a little bit more complicated. It's just a different format of setting up your income statement. You can do a multiple step, a single step. It just depends on the preference of your business and what is it that you're trying to accomplish with that income statement. Okay, but that is basically how you prepare an income statement. The textbook explains all of the different financial statements. It explains the different accounts that are being incorporated, the different formats. Please review your chapter. Okay, don't just use my lecture as, okay, this is all I'm going to do. No, you need to read the chapter and become familiar with all of the content. Okay, now the last problem that I'm going to go over, I think, yes, let me just confirm. Yes, you're going to see something similar to this on your test. Okay, so pay very close attention. Okay, so this particular problem deals with sales and purchase related transactions using a perpetual inventory system. They give you a variety of transactions and you have to journalize them. Okay, so the instructions are to journalize the transactions. So we're going to go through all of these transactions, and I like the specific problem because it includes both sales and purchase related transactions that include discounts, that include shipping. It's just a wonderful exercise, okay? It can get a little bit complicated or confusing, but make sure that you follow along and that you review the examples provided in the textbook, okay? So we're going to start off with the first transaction, and these are dated November. So the first one, it was November the 3rd. Okay. It says here, you purchase merchandise on account from Moonlight Company. The list price is $85,000, but you're going to get a trade discount of 25%. The terms are FOB destination, 210, net 30. So that means you're going to get a 2% if you pay within 10 days. Okay. So we have to record that purchase in our books. Okay. So we are buying, it doesn't even say what we're buying, but we're buying some kind of goods, okay? And the list price is $85,000, okay? So we're buying goods to resell, okay? So we're going to buy from a vendor, and then we're going to put them in our store, and we're going to sell them at a higher price and make a profit. That's how retail works, okay? So I'm going to purchase these goods, and I'm going to put them into my warehouse. Okay, we have an account called inventory that's introduced. Okay, inventory. So that is goods that I'm sitting in my warehouse that I'm going to be selling in my store. Okay, so the account that we're going to be debiting, it's inventory. Now, how did you pay for these goods? It says here that you purchased them on account. So if you purchase them on account, then we're going to go ahead and we're going to credit an account called accounts payable. Okay, we owe this money to Moonlight Company. Okay, and we need to reference the name of the vendor. Okay, in this case, we are buying on account from a Moonlight Company. Okay, so we debit my inventory and we credit my accounts payable. And I misspelled payable, guys. Payable. There we go. So, now we need to figure out the dollar amounts, okay? Those are my two accounts, okay? Now, I've created this little template here on the side to help me figure out my purchase amount, okay? So, it says here that I purchased $85,000 worth of goods, okay? Now, we had a trade discount. The trade discount is 25%. So, to calculate my trade discount, I'm going to get my 85,000 times 25%. So 85,000 times 25% will give you a trade discount of 21,250. Then you have a purchase discount, okay? The problem says that if you pay within 10 days, you'll get a 2% discount. When we're booking these entries, we have to acknowledge and, assume that that discount is going to be taken. Okay, so we have to record that 2% discount. Now, to obtain the discount, what we're going to do is we're going to get the 85,000, and I need to put a minus sign, equal sign, I'm sorry. We're going to get the 85,000 minus my trade discount of 21,250 because I'm not going to pay for that. That's a discount. And then I'm going to multiply by 2%. And then that's going to give me a purchase discount of $12.75. Okay. Now this particular problem does not include any freight information. So it just says that it's FOB destination. If it's FOB destination, then the seller pays for the shipping. So we don't have to worry about it. So my freight is going to be 0. Okay, once you do that, then you just basically do what the formula says. It's going to be your 85,000 minus 21,250 minus your purchase discount of $12.75 plus your freight, okay? And that will give you $62,475. That is the amount, that is the purchase price or the purchase amount of those goods that you are buying. It includes the trade discount, it includes the purchase discount, okay? So that is the amount, $62,475. Let me just put commas here. Okay. So that's how we get the 62,475. Remember, the trade discount is the 85,000 times 25%. The purchase discount is going to be your 85,000 minus your 21,250. Whatever you get, you multiply by 2%. Okay? So that happened on the 3rd. On the 4th, you sold merchandise for cash, 37,680. The cost of the goods sold was 22,600. So now we had some goods available for sale. We managed to sell some of those goods for 37,680. Whenever it tells you that you sold merchandise, there's 2 entries that need to be done. Okay, the first entry is to record the actual sale in our books. Okay, how much did you sell and how did they pay you? Did you get paid cash? Are you setting up a receivable? How? Okay. The second entry that needs to get done is to update our inventory balance and update our cost of goods sold amount. Okay. So there's 2 entries associated every time you have an entry that says that you sold merchandise. Okay. So this happened on the 4th. Okay. So it says it sold merchandise for cash. So what did we receive? We received cash. Okay. What did we do to receive that cash? Well, we had a sell. Okay. So we're going to have sales. And the amount is 37,680. That is how much cash we actually received. That's how much we're going to record in our books as a sell. Okay. Now we also need to update our inventory. Okay. It says here that the goods that I sold cost me 22,600. So now that they've been sold, I can record my cost of goods sold. Okay. And it was 22,600. Okay. And now I don't have those goods in my inventory anymore, so I need to reduce my inventory by the 22,600. Okay. So that happened on the 4th. On the 5th, you purchased merchandise on account from Papoose Creek Company, 47,500, terms FOB shipping points, 210 net 30, with prepaid freight of 810 added to the invoice. Okay? So, let me do that same transaction. And this is a transaction dated November the 4th. Okay. So it says here that you sold, oh no, that's the 5th, I'm sorry. November the 5th. Okay. So it says here that you purchased merchandise on account, 47,500, okay? So my merchandise purchase is 47,500. They didn't offer any trade discounts. Okay. Now, did they offer a purchase discount? It says here, FOB shipping point terms 210 and 30. Yes, they offered a discount of 2% if paid within 10 days. Okay. So what would that discount be? Well, it will be the 47,500 times, and they're giving us a 2% discount. Okay. So that will be $950. Now it says, what does it say? It says prepaid freight of $810, and this is FOB shipping point. Okay. FOB shipping point. FOB shipping point, the buyer pays for the freight. Okay. The buyer pays for the freight. So we are buying merchandise, so we are the buyer. So now we are responsible for the freight. And the freight amount of $810 was added to the invoice. Okay. So we do have freight of $810. So my purchase amount that I'm going to record is $47,360. Okay. That is the amount that I'm going to record for my November 5th transaction. So you got your merchandise purchased minus your trade discounts minus your purchase discounts plus your freight will give you $47,360. Okay. So now we have to record that entry on the 5th. Okay. So every time that you buy merchandise, inventory is going to increase. We're going to debit it. And then it was purchased. It says purchase merchandise on account. Because it's on account, we're going to use accounts payable. And the name of the vendor is Papoose. Papoose Creek. Okay. So every time you purchase merchandise, you're going to debit inventory, you're going to credit accounts payable. Okay. And the amount that we calculated for November the 5th was $47,360. Okay. That's the amount that we're going to enter over here. So that happened on the 5th. On the 6th, you return merchandise with an invoice amount of $13,500. That represents $18,000 list price less the trade discount of 25%. Purchased on November the 3rd from Moonlight. Okay? So, we return some merchandise with an invoice amount of $13,500. Our customers return merchandise to us that was purchased. Okay, so it says here, return merchandise with an invoice of $13,500 purchased on November the 3rd. So we purchased some of these goods November the 3rd. Now we're returning some of that. We're making a return. You're returning merchandise. Okay? So that's happening on the 6th. Now, it's saying that the invoice amount is $13,500, and this has to do with the November 3rd transaction. So let's look at November the 3rd. On November the 3rd, we had that $85,000, that trade discount, and the FOB destination discount of $210. Okay. Now, the problem says that we return merchandise of $13,500. It was the $18,000 list price minus the $25 trade discount. So the trade has already been taken into consideration. What has not been taken into consideration from the transaction from November the 3rd, okay, is, what was I saying? Okay, let me see. What is not being taken into account is that discount of $210, okay? So, we're going to have to figure out, okay, the return. So, for the return, I'm going to set up the money on my, it says that you return merchandise. It doesn't say that you send them the money back yet. It just says that the return merchandise with an invoice amount of $13,500 purchased on November the 3rd. So we bought some of the goods. For whatever reason, we returned a portion of them. And because we did purchase them on account, on accounts payable, we haven't made any payments yet. What they're going to do is they're going to deduct my balance for the amount of my returns. Okay? So I no longer owe for these goods that were returned. Okay? So I'm going to debit my accounts payable. For Moonlight Company. And I'm going to credit my inventory. Now, why am I crediting my inventory? I had these goods in my warehouse and I just returned them. I sent them back. So do you have more or less inventory? Okay. I have less inventory because I returned the goods that I didn't want. Okay. Now we need to figure out the amount. Okay. So it says it's $13,500 and they've already gotten or worked out the trade discount. Now we need to work out the purchase discount. Okay. So in order to do that, what I did here was I'm going to get my $13,500 and I'm going to multiply my 2% discount, which is $270. Okay. So then I'm going to subtract the $275. So the amount that was being returned was $13,500 minus my discount of $275. Let me see. Did I do that right? It was $13,500 and it is a 2% discount. It's $270. You see? $270. I had missed calculated. Okay, so 270. So we're going to get the 13,500 minus the 270. That will give me $13,230. Okay. So for the transactions dated November the 6th, you just obtain the amount of the invoice less trade discounts and multiply it times the purchase discount, and then that will give you your total. On the 8th, okay, you sold merchandise on account to Quinn for $15,600 with terms N15. So that means that they have to pay you the invoice amount within 15 days. The cost of goods sold was $9,400. So we bought these goods for $9,400 and we resold them for $15,600. Okay, pretty good. Okay, so whenever we have a sale, there's two entries that need to get done. The first one is to record your accounts receivable. Okay, have they paid you? If they were to have paid you in cash, then you do cash. But on the 8th, it says you sold merchandise on account. So we're going to be getting that money at a later point in time. Okay, accounts receivable. Okay. And then why did I set up that receivable? Well, I had some sales during the month that I haven't collected. Okay. Okay. So the amount of my sales, sold merchandise for $15,600. So I'm going to debit $15,600 to my accounts receivable. And I'm going to credit my sales $15,600. Okay, and what this will do, it will update your revenue stream or your revenues. It will show that you generated on November the 3rd those additional $15,600 from your sales. Okay. Now the second entry is to update your cost of goods sold and inventory. Okay, so your cost of goods sold, this is how much you paid for those goods that you're reselling. On the 8th, it says here that the cost of goods sold was $9,400. Okay, and you are going to offset it against your inventory. Okay, because it says that you sold merchandise. So if you sold merchandise, then that inventory is no longer sitting in your warehouse. It's been shipped. So we need to decrease our inventory balance. Okay, on the 13th, you paid Moonlight Company on account for purchases of November the 3rd less the return of November the 6th. So we have to be referring to these entries, okay? So it says that you're paying Moonlight for what you owe them, okay, on the 13th. So let's see what happened on the 3rd, okay? So on the 3rd, you know what? We set up in accounts payable. We owed $62,475. Okay? $62,475. This is what happened on the 3rd when we purchased the material. Then what happened? You returned some merchandise. Okay? We returned merchandise on the 6th. How much did we record for the 6th? To our accounts payable, we recorded a credit of $13,230. Oh my Lord, let me see what I did. 62,475 minus 13,230. Okay. So what I owe is my transaction from November the 3rd minus my transaction, which was for my return on. Where is it? On the on the 6th. So it says less the return on November the 6th. On November the 6th, our accounts payable was debited for $13,230. Okay. So the $62,475 minus the $13,230 will give you the $49,245. Okay. So what are we going to do when we're doing this adjustment? We're paying for the balance for the purchase of November the 3rd less the return that happened on November the 6th. Okay. Okay, the 13th. So we're paying Moonlight Company on account for purchase of November the 3rd. Let's do return. Okay. So what I'm going to do is I'm going to debit my accounts payable for Moonlight. Okay. It says that you are paying. So if you're paying, your cash is going to decrease. So your cash goes down. And the amount we calculated was $49,245. Okay. So on the 14th, you sold merchandise on Visa, $236,000. The cost of goods sold was $140. So remember, every time it says that you sold merchandise, we're going to have two entries. Okay. So it says here that you sold merchandise on Visa. Visa transactions are considered cash. That money gets directly deposited into your business account at the end of day when the accounts settle. Okay, so you sold merchandise for $236,000. So when you sell merchandise and they pay with a Visa, we're going to assume it is cash. Okay, so we are going to debit cash of $236,000. Okay. And why am I receiving this cash? Because I had some sales. Okay, I sold some goods for $236,000. That's entry number 1. Entry number 2, we have to update our inventory and record our cost of goods sold. How much did I pay for those goods? Okay, according to the problem, this is happening on the 14th. The cost of goods sold was $140,000. Then what's going to happen to your inventory? If you sold these goods, are they still sitting in your warehouse? No, they're gone. So because they're gone, I need to reduce or bring down my inventory balance. Okay. So that happened on the 14th. On the 15th, it says you paid Papoose Creek on account for the purchase of November the 5th. So let's look at November the 5th here. What happened? Well, what happened on November the 5th is that we purchased inventory from Papoose on account. And now we're paying them, this should be 47. Okay. So, on the 5th, this is the entry that we had recorded for $47,360. And now we are paying it. Okay. On the 5th, this is referencing Papoose. Okay. Now we are paying that transaction on the 15th. It says paid Papoose the account on account for the purchase of November the 5th. So how much do I owe? We owe $47,360. Okay. So my accounts payable is going to be cleared because I no longer owe this money. And how do you usually make a payment? How do you all pay? We pay with cash. Cash is decreasing. We're going to credit it. And the amount of my entry for the 5th is $47,360. You have to go back to your original entry to figure out the amount. $47,360. Okay, so that happened on the 15th. On the 23rd, you received cash on account from a sale of November the 8th. So what happened on November the 8th? Let's look at that. On November the 8th, you made a sale, but they didn't pay you. They're paying you barely now. They're paying you on the 23rd. Okay, you received cash on account from the sale of November the 8th. So on the 8th, you recorded the sale. Now you're going to record the receipt of the payment. Okay. So if they paid you, what did we receive? Well, we received cash. Okay. What am I clearing over here? I'm clearing my accounts receivable. I set up an accounts receivable of $15,600 debit. If I want to clear it, I need to credit it. Okay. Okay. And the amount was $15,600. So that happened on the 23rd. On the 24th, you sold merchandise on account to Rabble Company, 56,900, terms 110 and 30. The cost of goods sold was $34,000. Okay. So, we sold merchandise of 56,900 and we offered a discount of 110 net 30. Okay. This is happening on the 24th. Okay, so we made a sale. We sold some goods. Okay. On account. So we're going to get paid on a later point in time. When you're going to get paid later, we're going to set up accounts receivable. This keeps track of everything that is owed to me. Okay, accounts receivable. We need to collect this money. And the accounts receivable is from Rabble Company. Okay. And then, well, what did we do? Well, we sold some goods. So we're going to have sales. Okay. Now we need to figure out the dollar amount. Okay, the dollar amount. Okay, so the problem says, and this is on the 24th, you sold merchandise for 56,900, terms 110. So what I'm going to do is I'm going to get my 56,900 times my 1%. That gives me a discount of 569. 569. Okay, so I'm going to get the 56,900 minus my 569. And that's going to give me 56,331. That is the amount of my entry. Okay, you have to deduct the discount of 1% that you're offering. Okay, you sold merchandise for 56,900. Yes, but you also offered a discount. And whenever we record entries, we have to account for that discount. So it'll be 56,331. Okay, that happened on the 24th. Almost done. On the 28th, okay, I'm still missing one entry on the 24th, sorry, because we are recording a sale. So we record the merchandise, so we recorded the amount of the transaction and the sales amount, but we also have to record our cost of goods sold and update our inventory, okay? So we're going to have cost of goods sold and inventory. So my cost of goods sold and my inventory on the 24th, you sold merchandise to Rabble Company for 56,900, terms 110. Okay, and the cost of the goods was $34,000. So they're giving you the amount of the cost of goods sold of $34,000. Okay, so now that we know that amount, we just plug it in right here. That's going to update our cost of goods sold and our inventory account. Okay. So that happened on the 24th. Okay. On the 28th, you paid your Visa service fee of $3,540. Okay. And businesses get charged for when customers use their debit or credit card. They get charged some kind of processing fee. Okay. The business is responsible to pay for those processing fees. Okay. So this is happening on the 28th, okay? So it says here you paid Visa service fees of $3,540, okay? So what I'm going to do is I'm going to debit my credit card expense. And I'm going to credit cash. Because they're probably going to pull out that money, that fee from your bank account, okay? $35.40. $35.40, and it was for $35.40. Yes, it was. Okay. And then last but not least, we have paid Quinn a cash refund of $6,000 for returned merchandise from the sale of November the 8th. Okay. So remember that sale that we did, and then we had some returns. Now we're paying off the balance. So we're still making payments for them, but now we have to record that refund. Okay, paid Quinn a cash refund for returned merchandise. So Quinn returned some merchandise. Now we are having to, and Quinn already paid the invoice. So now we received the merchandise after the payment was received. So now we need to issue out a refund to Quinn for those merchandise or those goods that we received that they returned. Okay. So in this case, we are going to use an account called Customer Service Refunds Payable. Okay. That chapter explains that a customer refunds payable is basically a liability account for estimated refunds and allowances that will be paid or granted to customers in the future. Okay, that's what a customer refunds payable account is. It's just another liability, but we want to keep it or track certain things separately. So this is happening on the 30th. So we're going to debit my customer refunds payable. And I'm going to credit cash. So why is cash being credited? Because I am refunding money back. When you go to the store and you return something, you give them the goods and they give you back your money. That's how it works, okay? So the amount of the return is $6,000, okay? So customer refunds payable account is going to be debited for the $6,000, and cash is going to be decreased by the $6,000. Okay. We also need to update our inventory. So what was the name of the company? Quinn returned merchandise back to us, the company. So what happens to that merchandise? It's sitting in our warehouse. We need to update our inventory records to show that those goods were received and they're available to be resold to another customer if they're in good condition or whatever the case might be. Okay. So we have the last transaction that we have to do. Our inventory is going to increase. Why? Because now we have those goods back in our hands and we can resell them. Okay. Then this chapter also introduces us to another account called Estimated Returns Inventory. This is basically a current asset account for the estimated amount of merchandise that will be returned by the customer. Okay. So it says here that a cash refund for returned merchandise from the sale of November 80, the cost of the returned merchandise was $3,300. Okay, so the cost of the returned merchandise was $3,300. Okay, so I'm going to debit my inventory and I'm going to credit my estimated returns inventory for $3,300. Make sure that you review all of the different new accounts that are being introduced in the chapter. If you have any questions, please feel free to let me know. You will have a problem similar to this on your test. Know how to calculate your transaction amount. Oh, I was trying to make it smaller. Here we go. Okay. Know how to calculate your transactions. Remember, you start off with the merchandise that you purchase. You subtract any trade discounts. You subtract any purchase discounts, and then you add your freight if you're liable for the freight. Okay, and that's going to give you the amount that is owed. Okay, so that is all of the information that I have for Chapter 5 lecture. Please take the time, like I said before, to read. If you have any questions, please make sure to contact me during my scheduled office hours or send me a Blackboard message or email, and I will try to respond as soon as I can. Okay, that is it. Until next time, and stay safe, guys.